everyone, Basil Chapman sitting in for Tom O'Brien. I usually do the Tiger Technicians Hour, noon till 1 Eastern Time, and I have a newsletter called The Opening Call. So let's go to the market. Dow's up 751 at 23,437. This time yesterday we were saying minus over minus 600. What a whoopee market. You can see it by this left side chart here. This is the daily chart in my work. Weekly chart in the middle, monthly chart on the right. Now what we're looking at, and what's really important, is that I use some technical tools. You can see the MACD, the moving average, convergence, divergence, did turn up. The stochastic is okay. It's at 47%. It should have had a much better day today, but it's at least at 47%. And the weekly chart is still very negative. A lot of work needs to be done for it to repair the damage. Monthly chart, well, we've just started January, so we can't talk about it, but it did close December with very poor technicals. So it's going to take the Dow at least a push into, I would say, by Tuesday, Wednesday at the latest. I want to see the Dow trading. The high today so far is 23,518. Earlier in the day, when during my show, I was saying I want to see a move. Whoops, chart. I thought everything's set up here. Let me just do that again. Chart. Here we go. There you go. So the chart on the left is the Dow, in the middle is the weekly chart, and the right is the monthly chart. I want to see this, the 14-period exponential moving average, it's above it. Earlier in the day, we were up about 650. I said, good action. I would like to see the Dow trading in the 25,450 to 25,500 area, and I'd like to see that at least consistent to make the 23,200s key support. So that's what I'm looking at here. Fortunately, we still have one position long in the Dow, which is doing very nicely because it's just been so whoopy. We've had tight stops, had really good entrances, but you've got to keep your tight stops in this particular kind of a market. What's really important about this is the speed with which we've gone to 3 legs higher. I label them peak A. If it goes above A, it becomes leg B, then it goes to peak B, and then you can get a C. I want to see the 4th highest peak. D is where we look for other things to happen. It can go higher, but that's where other things can happen. And the quicker you get to that D, the quicker the chances are of a pullback, not a major pullback, but a pullback, and then you get a real test of strength. All right, support has to hold at this particular point to 23,400. I'd make 22,900 an absolutely key support. A break under that, a close under that in the next few days. And of course, we've got the Fed talking one way. At different times, they've said different things with different implications. But with the jobs report at 312,000 this morning, that was a very big surprise. Yes, it did take in the seasonality effect of the holidays in December. We'll see what January does, but so far that is good. And what if the January report is maybe 280 instead of 130? That's really good. And in that regard, you've got to say to the Fed needs firing power. If the market really starts to tank, the Fed is going to need some way of stimulating the market by getting lower rates. So I understand this move. But that's the one thing. So there's certainty about uncertainty, which has become a little less uncertain, but we still don't really know what the Fed's going to do. It's what they've said that the market's responding to. And China's the same thing. China might have said, hey, I think we're making good negotiations, but you know that China negotiates very differently from America. So we might find, yeah, they're doing great negotiations, but when the chips, the semiconductor, when the chips are just a joke, the chips are down, maybe it's not such a great deal in the end for America. Maybe it's a great deal for China. We don't know. So that's something that's outstanding. So I'm saying price is the dictum. Price is the arbiter of the trend. And I want to see good trading in the 23,600, 700 area early next week. I don't want to see a big pullback here. That'll be very disappointing. All right, let's just move on. S&P is also up, so the Dow is up 3.27%. The S&P is up 3.3%. Yeah, they're in line, up 81 at 25.29. A little bit stronger daily chart than the Dow. That's good. The MACD is good. Stochastic also at 45%. I would have preferred much higher at this particular point, but it did hit the 200-period moving average. You see in the weekly chart, that 200 period exponential 200 period moving average got hit, and we bounced right off it. I always like that. That's a good sign. Little V-shaped pattern in the stochastic here at the bottom, and the on-balance volume actually didn't go anywhere close to the bottom that was made when it made lows even earlier in the year, back in April, March, April, February, that whole period. All right. So the monthly chart is still not looking that great, and the weekly chart is improving, but not looking good. Now the QQQ, the 3 Qs, that is the trading vehicle for the Index 100, the market vectors, trust series, trading also in leg C in the daily. 143 was the low. Just in December the 26th, is trading at 156, 23 points higher. That's nice. Weekly chart is not too great, and the monthly chart is really not very good. So this daily chart needs work. It needs to push into the 159. I would love to see 160. That will say, yes, January can be a really good rebound month, because if it starts to fail in the next few days and takes out at 156 right now, if it takes out 153 support, that's the 9-period moving average support in the daily chart, that won't be very good action. I'm a little worried because the semiconductor index, the way I read it, I don't think they can see a turnaround until the first quarter of this year. So sometime in this quarter, I'm anticipating they could make some kind of a low of substance. But at this particular point, they're running very nicely on the day. But both the daily and the weekly charts really look poor, even though it held the 200-period moving average in exactly a beautiful arch formation. Price time match. I do this. This is one of the things that I do. In fact, I'm doing a webinar on the 23rd of January, Wednesday, an all-day webinar on Chapman Wave techniques. For those of you who have heard me here, you know I talk about these techniques all the time. Let me just see if I can do something here. Here's the ESH. This is the daily 2-minute, 5-minute, 10-minute chart of the E-mini. Let's see how that's doing right now. Why is it not clicking on? ECA. Okay, there it is. So you made a peak F in the Chapman Wave, top in the 2-minute, you made a peak D. There's the H pattern I'm always talking about. There's the arch. So the next 20 minutes, 30 minutes is going to be very important. Peak F in the 10-minute chart. Spectacular move, taking a bit of a breather. I'll be back straight after these important messages. Dow's up 750, S&P's up 82. Basil Chapman sitting in for Tom O'Brien on the Tom O'Brien Show. My pleasure to be here. I'll be back straight after this break.